Have you been surprised at how strongly the banks have come back, and do you think that they are still looking good value?
You know, I saw some statistics yesterday that would reflect that the banks, on a valuation basis, are a little rich compared to other industrials or the average shares in the market. They certainly have had quite a run. I do think that worldwide there's still exposure for the banks. In the United States, for example, there are probably some liabilities on bank balance sheets that haven't yet been written down. Commercial mortgage-backed exposures are still out there. A lot of that is being extended and kind of reworked, but I don't think that that's yet reflected in write-downs with the banks. So I think that banks have had a nice run and probably need to take a bit of a breather here.
Scott, there's a lot of pushback from the banks in the States against the proposals for regulatory reform. Have you got a view about the nature and desirability of the reforms that have been signalled?
I think what you're going to see is inevitable, and it is always the reaction of markets after post-crisis, is that there's going to be increasing regulation in the banking industry. I think there's talk of and proposals around consolidation of regulatory oversight into a single entity. I don't know whether that, in fact, is going to take place. But I think there is clearly going to be a focus on the strength of bank balance sheets, the practices of the banks in terms of managing those balance sheets and managing those risk exposures. I think that's inevitable, and you see that post-economic crisis, which we've certainly seen in the United States.
Is it in the interest of the markets and the community to have banks that are now classified as banks behaving like investment banks?
Well, I think there's different functions in the banking charter, right? There's the concern, I think, that exists most is our banks, particularly in the U.S., offering credit and facilitating the use of credit for the recovery in the economy. And that certainly was an impetus under TARP. As the government took positions in the banking industry, it was to help facilitate and stabilize the banking system first and foremost. Secondarily, it was to try to inject credit back into the markets and free up the lending activities that the banks would offer, with the thesis that it would then re-spark the economy and sustain a recovery. I'm not sure that the TARP program was successful in creating that injection of credit into the markets, although we have seen a return in lending practices. But I think that's not what the focus was, that hasn't been a focus for some of these banks, as they've focused on managing their own balance sheet and managing their own assets through proprietary trading. It's just a very different business model than the traditional lending business.